Alright, welcome back, Watchmen. Let's learn. Alright, so today we're going to talk about a couple of very important things that a lot of retail traders I've talked to they just don't either know about it or haven't taken the time to set it up. And it's very important if you want to ever become a profitable trader. Then these are some things that you're going to need. You need three very distinct things if you plan on becoming a profitable trader. You need a strategy, a trading strategy that's going to give you the edge. You need a plan to enact that strategy. You need a plan to house that strategy, and you need discipline. You have to have discipline. You have to have the discipline to set a trade, set all your entries and exits, and walk away from it. You have to have the discipline to follow whatever stipulations might be in your specific trading plan so that you can maintain the edge that you have. The plan doesn't work if you don't follow it. And like I said earlier, there's a lot of retail traders that don't have plans and strategies and don't use risk management, don't use stop orders, and it is really mind-boggling. It's crazy how many of you out there are just either in the dark or just don't use it. And we're gonna try and remedy that today. So we're gonna go over what a trading plan is. We're gonna discuss my specific strategy that I use, and I can't do anything to instill discipline in you. That's the one that's completely on you. I can hand you a strategy and I can hand you a trading plan, but those two don't matter. If you don't have the discipline to enact your plan, then it doesn't matter how good of a plan it is. So I can give you everything that I can give you, but I can't give you the most important part, which is going to come from yourself. You have to have discipline. So let's go ahead and move to what I have here. This is I downloaded this. I did a Google search on blank trading plan template, and this came up. I filled in a couple little lines here, and we'll go over and we'll discuss what all these little things are here. So your mission statement. Now this is going to be, this is what it says here is to define the purpose of your trading and the goals that you intend to achieve. Now this would be something that's going to be like a statement you're going to read. It's the first thing you see when you pick up your trading plan. So you would write something like what I wrote here. I'm trading to create an additional revenue stream for retirement. My goal is a minimum of a 10% increase in account size annually. Okay, so we want to at least match the average on the S&P returns. Now, so this is not something that you're gonna walk around and put on a t-shirt. I mean, you can if you want to, I guess, but this is more of a motivating factor for you to remind yourself of why you're doing this. It's a good idea to have it at the top, so it's the first thing you see every time you pick up your plan. Which, when you're trading early on, you should have this plan taped next to your monitor or in your hand or something. You need to review this in detail every time you go to prepare for the day, and we'll go over that later too. But let's go. So we need a section for market selection. This is going to be how you pick which tickers you're looking at, which ones are going on your watch list, which ones are not going on your watch list. You can go ahead and set up all your little stipulations down here, like it has to have a minimum price of X, it has to have minimum volume of X million shares traded on a day, it has to have a 52-week low of XYZ, whatever you want to put in there. If you want to exclude Bitcoin mining companies or the biopharma, whatever, this is the section that you're going to want to put all of your little stipulations for what you're scanning for and what kind of tickers you're trying to trade. Alright, so then we'll go on to the next section, which is core indicators and analysis. So this is going to be which TA indicators you use, which how they fit into your plan for finding a trade, how you identify your support and resistance zones, which method you use for that, if you use supply and demand, or if you use just highs and lows. You want to go ahead and detail everything out that all of your toolbox here. You talk about your time frames, which time frames you use to look for trends, which time frames you use to look for entries and exits and stuff like that. I'm going to lay out all the details of all of your toolbox in this section. Alright, and then we'll develop the entry strategy. You want to define your exact conditions that are required to open a position. You want to talk about any secondary requirements that must be met, what the specific patterns or signals from your toolbox up here that you're looking for. This is going to be all of the details that have to line up before you make your entry. And then you can explain the exact, it says explain the precise moment to execute the trade. This will be like, okay, so I've been watching volume, it's good. I've been watching the RSI is climbing, and now that price has crossed over the 50-day MA. That's my trigger. Once it crosses over, then I buy, or something like that. Whatever your specific trigger is. And we'll go over all this. Some of you have already seen it in the foreign lands. This is I have specific entry requirements that I use when I do my trades. Alright, so risk management. This is a very important part. This is probably 5 and 6 are the most important parts, and they kind of go hand in hand, exit strategy and risk management. So the number of traders that I talk to on a daily basis that don't use stop loss trading, like I said in the beginning, it blows my mind. People probably looking at this and say, oh, AC, why are you not a profitable trader? Well, at one point in time I was, and then some things happened in life, and I had to liquidate all of my holdings, and I had to get away from the market for a while, and for several years, and I'm just recently returning. So I mean, this is not. We'll see as we go through the foreign lands. I'll be able to show y'all more of my strategy and how it works, but we'll go through this with the basics of my strategy, so I can we can put some more details in these little sections here. Alright, so risk management. Outline the rules for protecting your capital. You want to go ahead and line out your maximum risk per trade. You want to risk 1% of your account balance, or 2 or 3, or even up to 5%, whatever that is that you are willing to lose per trade or per day, or whatever you risk. You're going to state that here in this section. Now, so you need stop loss placement. You need your rules for stop loss placement, such as I'll put my stop on the opposite side of the demand zone that I'm lining up for entry on. My stop is always going to be, we'll just say 0.5% or something. I usually just pick the nice round number on the next side of it. But whatever your methods are, you'll line all that out here. Position sizing. Okay, so there's a very easy way to figure out, hey, I want to risk $50 on this trade. Then how do I figure out how many shares to buy? Well, you take your risk number and you divide it by entry minus stop. So that would be 2 cents in this one. So $50 divided by 2 cents gave me 2,500 shares. So I knew that my $50 risk position size needed to be 2,500 shares. Now we come down here for a different price. We see on AGPU my entry was 305 and my stop was 245. So that's a 60-cent difference right there. Okay, so my account value was only 500, so my risk, 5%, I do 5% per trade. So 5% of $500 is $25. Alright, so I'm going to divide this by 60 cents, and I got 42. So I knew that I needed to buy 42 shares at my entry price if I wanted to risk this amount. Right? Okay, so that's a very easy way to determine your position size, instead of going to calculators, pulling up different calculators for this and for that. It's just easy math. You can do that any way you need to. if, like for this one, 18 and 59 cents. Right, take this. This is 0.035. If you subtract your stop from your entry. So we divide 18.59 by 0.035, and I got 531. I actually got 531, but that number bugged me, so I just put my position size as 530. So if this GV hits on Monday, I'll buy my orders for 530 shares at 28 cents. Alright, so your exit strategy. Profit targets. Always set multiple profit targets. Anybody that's been following me sees I always set more than one profit target. I never allow my trades to just run all the way to my goal. That's a personal preference on my part, because of the way that I've had to tweak my trading strategy. This is just the way that it works out the best for me, the most profitable over time. So this is the way that I do it. Now you'll see people that say the opposite of that, and you'll see other people that agree with me. It's trading strategies are very personalized. It's going to be very specific to you and what the level of discipline that you're able to put forth on it. You know, you can't make a trading plan that is not even possible for you to execute. So we can talk about all that too. But for now, we need to make sure we go through this exit strategy. You want to set your profit targets. You want to decide if you want to use trailing stops or if you want to do it manually. You could list all the stipulations for exiting a trade early or staying in longer than you normally would. This would be where you set your limits for how long to stay in a trade. If it's not doing anything, if it's not moving up or down, if it's staying flat. You set all those rules in this section here. Alright, so, and then your routine. And this is, a lot of people are going to say, oh, well, this is just common sense. You want to do this, but it's not common sense. If it was common sense, everybody would do it. And, you know, some of it might seem silly, but it is important. It's important to keep track of this right here, your mental state while you're trading. If you have a trading journal like what I have over here, we'll talk about this too. This is important to keep this trading journal. You can have a section in it for your mental state. You want to record the mental state that you're in when you execute these trades, because it will help you later on if you realize that, hey, you know, 10 of my 12 losses last month were when I was excited about, you know, my dog or something like that. And you can realize, hey, you know, maybe my dog is making me too excited and I'm not focusing on my trades and I'm entering poor trades and I'm losing on them. You know, it's just another factor that you can use to identify problems or, you know, strong areas. Alright, so that about covers the basics of the trading plan. You always want to keep a trading journal like what I have here. This is going to mark all of the tickers that you take. I like to use fields such as my entry and my stop, and then I set current account value before I take the trade. I'll set up a column for the cost of the trade at the time based off of how many shares I bought, the risk I'm allowing myself on the trade, and then all of my different profit targets and whether or not they were hit, which I notify with green or red, and this will be the number of shares that I sold when it was hit. You know, and then I have another column over here that is supposed to calculate how much I have if I closed everything right now, but I just started working on this one. It's going to take the formula is going to take some ironing out. And yeah, that's about it. I mean, it's not really rocket science. There's a lot of science involved with it, and there's a lot of seemingly simple concepts that are not either just not readily available on the public, or people just laugh it off and maybe don't take it seriously. But this is a very important thing to do if you ever intend to be a consistently profitable trader. There's really just no way around it. You're not gonna. You might get lucky on a couple of trades here and there and win big a little bit. You might even win big a lot, but you're not gonna ever be consistently profitable without a strategy, a plan, and discipline. So, until the end of all things, the Night Watch stands forever.